But no, welcome to 100 Black Men presenting the Introduction to Trading Financial Markets for Investment and Income. Over the next 10 hours of these sessions, or 9 hours of these sessions, we're going to hope to demonstrate that. So, what's the background to this? We've had our black swan moment. A lot of people are calling it a black swan moment, you know, as per the book by Nazim Nicholas Taleb. And, you know, in case you've missed it, we're in this COVID lockdown. I don't see it as a black swan, to be fair, because reality is, you know, we've had SARS, we've had other pandemics, well, we've had other, you know, health scares, and it was only a matter of time before one of these has gone global. So I see it more as a tipping point. We've got to this point in time, and the world as it was yesterday is totally different to the world, you know, that we wake up to post-COVID. And so, yeah, the world has changed, and there's a very good book by a guy called Harry Dent, that predicted that a lot of this stuff was going to happen. And there's a lot of, you know, economic, geopolitical issues playing out in this time. Question down to you guys, though. You know, how do you feel about that? Yeah, how do you feel about it? Obviously, the world's changed, the world of work's changed. You know, what are your feelings out there? You know, just fire in quick one-word answers. What are you feeling? Hey, brilliant. That was a word I was actually looking for. You know, other words that people are going to feel about this are worried, concerned. But, you know, if you look at the work of Harry Dent, and he trades the way that I'm going to be teaching you guys to trade, is that we've been here before, and we've got grand cycles playing out, smaller cycles playing out, and the old is going to give way to the new. And once the old does start giving way to the new, there are going to be new opportunities out there. You know, this fall in the markets is bigger than the Great Depression. But one of the things you need to think about with respect to the Great Depression is that more millionaires were created after the Great Depression in that period after than at any time in world history. So there are opportunities out there, and the old's going to give way to the new. It's going to be things like new money, gold, cryptocurrencies, and there's very good books by Mike Maloney and Sam Volkering with respect to cryptocurrencies. It's going to be things like renewable energy, 5G, Internet of Things. You know, we're all going to be buying a new phone at some stage within the next couple of years. You know, if you've not already got a 5G phone, it's big data, it's artificial intelligence, self-driving cars, self-driving Uber. So those are things that we can be excited about in terms of the future. And there are opportunities that we can get involved with. So, you know, how do we come to be here? Well, you know, this session has been put on, and, you know, I was asked to do it by Ollie, our president. And so the fact that we all get together on this Monday morning is thanks to Ollie asking me to do this. It's part of the 100 Black Men of London, and our work, we're a community-based, you know, for those of you that are not part of the 100 or are not aware of us, we're a community-based mentoring group focused on mentoring, health, well-being, economic empowerment, education programs, and we're a chapter of a US organization. We work with Diamond, some of our young people that are also on this session as well. We do need a lot of help, and we do need your support, but I'm not going to be asking you for money just yet. Yeah, my feeling is if I can show you how to make a little money in the markets, then you know, if I can show you how to take £200 and double it, then you won't mind giving the £100, and we've got a very good fundraising, ongoing crowdfunding session that we're going to be running for the rest of the year. And so there's an opportunity to be part of that, but I'm not going to ask you that yet. Okay, so to answer this further, what we are trying to do is improve financial education in the community. We're trying to promote a rich dad mentality. Yeah, you know, my late father was an accountant. You know, I didn't read Rich Dad, Poor Dad until my 30s. I think if we can get a better financial education in the community, then our outcomes and will be greater, and we'll be able to build generational wealth. The average millionaire has 7 income streams, 7 separate income streams. So, and if you look at the greatest income in the world, a large proportion of them are in relationship to trading. So I've mentioned the old will give way to the new. It's going to be things like gold and cryptocurrency. In gold, well, guess what? These are silver eagles. This is called poor man's gold. So there's nothing to stop you buying silver as a workaround. There are ways to invest in shares in relationship to silver, and we've mentioned people like Mike Maloney. There's Mike Maloney's book, The Rich Dad's Guide to Investing in Gold and Silver. So, you know, if you feel that's something you want to get, you'd be interested in, then that's a great way to go as well. And I've mentioned Sam Volkering with respect to cryptocurrency. I'm heavily into cryptocurrencies at the moment. And one of the things I would like to do is to put together 100 crypto Coinbase challenge. Now, have any of you out there got a Coinbase account? If you've got a Coinbase account, you'll know that there is a referral link out there. So, yeah. And so Coinbase will actually give you $10 of cryptocurrency, and they'll, you know, if somebody uses your referral link, and they'll also give the person using the referral link $10 of cryptocurrency. So what I'm going to suggest is, we've got a WhatsApp group. Let's all put our referral links in there. Let's get those people that don't have cryptocurrency, let's get them a little bit of cryptocurrency. So that's the challenge. You know, we work off the bank. So I'll do that. I'll start the ball rolling on that. Everybody else that's got a cryptocurrency account, if you're happy to post your referral link, let's see if we can spend a little wealth for people taking the time to actually be here. On the 100, we work on the basis of, you know, what they see, they will be. And so that's, you know, those are the fundamentals that we're trying to push out there. We're trying to improve our financial knowledge and, you know, make better outcomes in our communities. So what is this course? Well, it's an introduction. I can't promise to take you from being a trader, you know, from knowing not a lot about trading to being a bank trader in 10 hours. It doesn't quite work that way. But what we will be doing is starting your journeys, and it's not about me, it's all about you. It's all about your personal journeys with trading. People learn at different paces, people have different appetites for risk. So we're going to help you discover where you are, develop your own trading styles. And it's not a fundamental trading course. So we're not going to be looking at tariffs and unemployment rates and all the, you know, specific intricacies of markets that make them move, price earning ratios for stocks and things like that. But it's more a technical trading course, but just to show you what is possible. Okay, that's a graph of Bitcoin that I put together. It's a chart of Bitcoin that I put together last year. And a friend of mine I used to do business with spent a lot of money buying Bitcoin as it approached $10,000. And, you know, I was concerned for him. We've got a business relationship that goes back a very long time. And I was warning him that the price might drop to $5,000 and that he just spent $10,000 on what was more than likely more than one Bitcoin. So, you know, several, you know, $20,000, $30,000 on, you know, on Bitcoin. And I was warning him that his investment might drop to half. Now, that was in September last year. I think in March this year, Bitcoin dropped to about $5,000. It's now approaching about $9,000. Now, how did I know in September last year that the Bitcoin price might hit $5,000? Well, if you do this course, you do the 10 hours of this course, I'm going to show you how you might know that. So these are the things. This is the reason why we're a technical trading course, not a fundamental trading course. I've also got, and I'm going to share this with you as well. This is an email that, this is a WhatsApp message that I sent to my brother.
It's not showing up.
Just about to share it. So
Okay, cool.
sent this WhatsApp message to my brother on the 12th of March earlier on this year. So I'll read it for you. Just look at the potential S&P 500 trade, top 500 US stocks quoted in an index. It's about to hit a resistance level that started in 2009. We're currently sitting at 3,324. The stock market ran up and we'll end this week or next week. Hold on to your hats. The roller coaster down says next stop 2314. So if I share you the chart with that, I'm going to go to my trading platform and I'll share that with you. Right, and so can you see that? Where this red line is where I sent that email to my brother. That drop all the way down is the biggest drop in market recorded history. How did I know that was going to happen? I'm going to show you over the next 10 weeks of what we do. So that's as much as I'm going to tell you now. And if you stay with me, you give me your time for the next 10 weeks, I'll show you how you can do that and how you can have an idea where those where markets are likely to be going. So I'll just get back on track with a presentation. So give me a second. So I'm going to teach you to develop your own trading styles. They're going to be your trading styles. You're going to make your own decisions about this. And I'm not going to tell you what to share. Sorry, not what to share. I'm not going to tell you what to trade. You'll have your own interests and you'll decide where you want to go with that. The markets are one of the most democratic, non-racist environments you can ever operate in. The only thing they hate is stupidity. And so, I like to think of the film Full Metal Jacket, the first 5 minutes where the Sergeant Major's running around, bawling at everybody, saying the market, so just imagine him saying the markets hate you all equally. If you mess up, I will take all of your money and I'll happily take it and enjoy doing so, yeah? So it's very democratic out there and non-racist. So the only thing not to be is not to be stupid. So this is not going to be stock recommendations. I think for most of us, last time I looked at Facebook and Apple shares, I think Alphabet shares for Google were up well over $1,500. So if you want one Google share, then that's a $1,500 spend. So there's easier ways of trading stocks, which is a contract for difference, which is what we do via a broker. And I liken the difference between owning a share. It's the difference between owning a racehorse and going down to your betting shop and actually putting a bet on. So for most of us, it's going to be easier to trade contracts for difference. So here's what we're going to be doing over the next 10 sessions. So it's what do you need to know? So we're covering that today. We're going to get into the trading platform next week. This is going to be about crossing one line for us in terms of what we do. So we're not, this course, if you're interested in trading and you want to try it out, you want to decide whether this fits for you, there's only one way realistically to do that. That's to cross the white line, not to be a spectator, and to actually take part and be a player. So the idea is to get you trading as quickly as possible. We're going to look at your trade. We're going to download trading platforms for things like MetaTraders, stock charts. We're going to come up in the first week with your first strategy. After your first week, after that first strategy, I expect you to be trading and to be taking trades. We're going to build upon that. We're going to add in trend lines. We're going to look at what's called the wavy tunnel. Markets actually move in channels. Not everybody knows that, so you know more than the average trader out there. Japanese candlesticks. Japanese candlesticks are very important. I study Aikido on Mondays, and so I've been missing that. But and I do like things Japanese, and I use very Japanese. I use very specific Japanese techniques in terms of trading the markets and setups. We're going to build upon that. We're going to also move on and look at Fibonacci, and that's building our knowledge to get ahead of the market, being able to predict where things are likely to stop, turn around, where things are likely to extend out to. And we're going to build upon that with Elliott Wave. But you're not going to be masters of the market until you understand a little bit about bank manipulation. So we're going to do an entire session on that. And probably, if not the second, third most important thing that I should be teaching you, it really should be trading psychology. But you would, if I said to you do psychology first of all, then you wouldn't understand the need for that. But where you're in markets and there's real money at stake, it is important to come at it with a strong psychological background. So here's what we're going to do today. Very brief course overview, which I think I've done. A little bit about me, who this course is for, some of the expectations, risk, and we're going to do a very quick baby pips recap. I think obviously you've done your homework, so I don't need to spend too much time on that. So about me, science degree, School of Life. I grew up in Brixton. I think hopefully Michael, one of my long lost friends. Michael, are you on the course? Okay, well maybe you are, maybe you're not.
I am.
Michael, good that you're there. Michael's one of my long lost, well, not long lost, one of my oldest friend, I would say.
Less of the old.
I used to be a hurdler, corporate background, used to run my own business, supervise staff at football. I've been trading on and off for 10 years. I'm profitable, I'm consistent, I'm obsessed with trading. I was lucky enough to go and see Tony Robbins a few years back. And so he's one of his words is constant and never-ending improvement. And if you adopt that attitude, you will get this, and you can get very good at it. We're going to pay it forward. We're part of I'm part of the 100 Black Men of London, and I believe that if everybody helps one, then we'll make a better world out there. So who's this course for? It's those asking, can I do this? What will it take? There are also lots of careers around trading as well. People asking, can I trade for income or as a side hustle? Will this fit around a day job? Well, we're going to help you answer those questions. Also for people that have got existing assets that might want to manage those assets, better manage those assets, and looking for a deeper insight into the markets. If you look at people like Jesse Livermore, he ran away from home and started a finance career at the age of 15. So you're never too young to start. Who's this course for? Well, it suits people that are analytical and are patient. We're not looking to wake up every morning and jump into the markets. Most of the time, there isn't a reason to get involved in markets. And so it's about being analytical, about being patient. Also suits people with, quite maverick personalities. Has anybody heard of John W. Henry? I know we've got a lot of ladies on. So John W. Henry is the owner of Liverpool Football Club. And he made his fortune in trading the markets, trading commodities. And so, if you've got his degree background is psychology, and, often professionals don't get on well in the market because from a professional background, there's an expectation to be right or to use force of persuasion, and there's no force of persuasion in the markets. The market will do what it wants to do. You can't influence it. You've also got to be humble. One of my trading heroes, Alpesh Patel, he traded his way through university as well. So he's one person that didn't leave university with a student loan debt. So you can do things like that and trade your way through university, and there's lots of people that do it. You've got to be open at learning about the markets, and if you do this for long enough, you're going to learn a hell of a lot about yourself as well. It's not for people that are bored, action junkies, high-risk gamblers. Seriously, go, if that's your personality, go to Vegas. You'll have a lot more fun, and you'll get a lot more run for your buck if you take it to Vegas. It's not get rich quickly. Sorry, excuse me, that's my trading alarms going off there. It's not get rich quickly. It's not the winning number to the lottery. Even the best traders get a lot of trades wrong. So the best traders, and I've spent a lot of time with them, they'll only get it right 65% of the time, which means one in three trades are going to go wrong. So you need a certain amount of resiliency to deal with that. It's learning, working, putting the time in, putting the screen time in. The best traders earn as much as brain surgeons, and with that in mind, if you're earning that kind of money and getting a huge bonus, it's about not only being right, it's about being accurate and being right, not only right, but right at the right time. The big trap newbie traders fall into is that they get things right, but at the wrong time. It could be get rich slowly, just to let you know that. You could make some money. I've mentioned all traders lose money, and you could acquire a useful skill for life. And you know, I've been trying to get my kids interested in trading. Olivia, are you out there? Olivia, you on this course? Did you wake up?
Yes, I did.
Hey, Livy Lulu's. That's my daughter, by the way. So hello, Livy. You know, you're brilliant that you're here. You're starting out 10 years earlier than I did. So welcome to your journey. So you could acquire a useful skill for life, but once you've got it, you've got it. Nobody can take it away from you. There are funded accounts for those that are serious and good. People will actually give you money, their money to trade, because if you can do better than a bank will do, people will give you, you know, £20,000, £30,000. You can trade that, and you can get to keep 70 or 80% of the profits. So what this course is not, it's not a solicitation of trade. It's for educational purposes only. Heating, paying the bills, and you know, paying the mortgage, that's more important than trading. So you only want to trade with discretionary money that you can afford to walk away from. You want to start a demo on a demo account before you move to something that's live, and you do want to get best financial advice before you do that. So, right, okay, here's the homework that everybody did, and in a weird kind of way, I was always going to recap this for you, but I wanted you to, yeah, have an understanding of what it was that you might be doing. And I've mentioned, I think in the letters that I managed to send out to some of you, that you can look, it doesn't matter what you trade, all markets trade the same way, you know, with, you know, slight variations in terms of the way in which they trade. So we're going to learn on Forex. Forex is easy to learn on, it's very liquid. 5 trillion a day goes through it. You've got indices as well that you can trade, you know, under your trading platforms, contracts for difference. You can also trade stocks. You know, a lot of guys I work football with, they trade commodities. One of my football guys is very big on platinum, would you believe? You can also trade cryptocurrencies and things like that. I prefer to own cryptocurrencies, and I've got, you know, a large amount in cryptocurrencies, but they can be very volatile. So quick Forex recap, you know, 200 times bigger than the stock market. There's no centralized exchange, 24 hours a day. The market cycle, as it opens in New Zealand, it rolls around to Sydney, Tokyo, London, New York, traded by brokers and banks. And you can think of it as trading the potential wealth of a country. There are major currencies. You've got the dollar, which is the world reserve currency, the euro. We all know about euro and our relationship to that. You've got cable. The British pound versus the dollar is called cable because it was traded under a cable under the Atlantic. The Swiss franc tends to be a safe haven currency, although the Swiss don't like it to be, but you know, they've taken various actions over the years that have tried to dissuade people from parking money in Swiss francs. Canadian dollar tends to represent oil, would you believe? There's a lot of oil being traded. The Australian dollar tends to relate to commodities, things like copper, gold, coal, you know, all the commodities that help with they're helping to grind out China. You've got New Zealand, which is very food-based, and the Japanese yen represents Asia. Those currencies represent about 70% of the currencies that are traded out there. And if you look at them, it shows you where the global power remains in the world. You've got, major currency pairs: Euro USD, GB USD, New Zealand USD, and you've got the flip sides of those: US dollar versus the CAD. The majors tend to be a variation of the US dollar, matched with Euro, GB, the other majors. And you've got the ones that are dollar-led, so like the US dollar CAD and the Euro USD. If ever you're in a trade, a quick way of checking if you're trading in the right direction is that the quote currency, the Euro-led one, should be trading in the opposite direction to the US dollar-led one. So it's a quick way of checking if you're in those trades, whether you're going the right way. You've got things like major crosses, currency pairs, which include two major currencies, not the US dollar. You've got exotics. You can trade Brazilian reals, Swedish krona, Russian rubles, Mexican pesos. Yeah, there's a world of things you can trade. I think the dollar is king. There's 84% of everything traded includes dollar, 39% euro. Obviously, you can all read the chart, and they're traded in a variety of different ways. I think one of the things that we are going to experience is there is the dollar is a world reserve currency. If you look at fiat currencies in their lifetime, I think one of the things we're going to go through is that there will be a new reserve currency coming into play, and that could be that could be gold backed. That could be something. It could be something different. It could be a basket of currencies. But I think we've got some major changes coming, off the back of this crisis. I think Nixon came off the gold standard in 1975, and we're 50 years on from that. So watch this space. There could be something new coming down the pipeline. So why trade Forex? There's no commissions, high liquidity. You've got leverage, you've got margins that you can take advantage of. There's lots of free stuff trading Forex, including trading platforms. You have to pay. A lot of the good trading platforms and stocks you have to pay for. Forex markets tend not to gap up, so you can a market can gap above your stop loss, dropping you into an even bigger loss. And until you notice that, you tend not to get gaps in Forex. So how markets very simple fashions. There's only three things that can happen in a market, and I think there's a lot of barrier to entry stuff about markets put out there. People like to think it's more sophisticated than it is. And I've got a friend, me and Michael, we've got a friend who's long-term sick. I watched him, put a series of bets on, and I had my laptop and I was sorting out a trade, and he looked at me thinking, what you're doing is really impossible. And I looked at him and thought, what you're doing is even harder. How do you choose which one of 12 horses is actually going to win a race? With variety of jockeys, and just to make it more interesting, they put a load of lead weight in the saddles of one of the horses. How do you predict a winner? Well, in trading, only three things can happen. The market will go up, it will go down, or it will hang around. So it's like going into a casino and playing roulette, where 60% of the keys are red and you get to bet red. That's all trading is. You're just betting your slide edge. In Forex, we play for pips. So it's the last 4 digits of a currency that we are trading. So you're going to know, if you trade Forex, you're going to know more about exchange rates than anybody down at your local bureau to change. So we trade those last four digits, and one of those digits is called a pip. If a market moves 10 pips and you're trading £1 a pip, you make £10. It's literally that simple. The good news with trading Forex and trading contract for difference is you can make money in markets. Whether they go up, you can buy them, or you can short sell them as well. And so if it goes down 20 pips, you're trading £1 a pip. Guess what? You've just had a good day. You've made yourself £20. We've got the bid price, and again, a lot of this is in the homework that you've all looked at. So it's the price at which your broker will sell to you, the ask price, price at which your broker will buy from you. The difference is the spread. So and that's how your broker makes money. So if you trade a pound a pip, then it will cost you £1.40 to get into a trade on a GBUSD. That's the spread. That's how the broker makes money. You can trade any size lots you want. We in the UK, our leverage and margin has been limited to 30-1. So you do need to have a good faith deposit in your account, and that has to be 1/30th of the amount of currency that you could take control of. Each trade involves two trades: a buy to get into a market and a sell to get out. It's a bit like buying a car. You buy a car and then you sell a car, and then you realize a profit or a loss. A stop loss is placed on the chart to realize, and typically you place a stop loss at a point where you are wrong about that trade. That's where you would put a stop loss, and it's to limit your losses in that trade. So we're going to be very conservative and risk focused. We're always going to trade with a stop loss. If you've not got a stop loss tag, you tell them whether you've lost or won a trade. And we'll realize a profit, as I say, when the market moves a certain number of pips in a set direction. I think orders, please don't worry about orders. When we come onto the trading platforms next week, orders will be very obvious, and the markets don't, the trading platform won't let you all enter orders in ways that don't work. We are going to demo trade. We're going to make mistakes with pretend money. So our homework is going to be to set up a systems with a demo account, and then we'll come back and then we'll start looking at the systems next week. We're going to eliminate our mistakes. We're only going to trade a few things. So if you're interested in cryptocurrencies, then we'll trade Bitcoin against the dollar. If you're interested in stocks, then we can trade the UK 100 stocks and or the S&P 500, the US S&P 500 stocks. The idea is to get consistently profitable, trade our system, know our system before moving to real money. And those of you that want to do that, then you can open a real account. The way the markets work, as I mentioned, they open in New Zealand, follow through to Australia. You get the Asian session, the UK session. The UK session, you're all very lucky. You are in one of the best places in the world to be trading any instrument. That's why we've got all these banks in the UK here. It's the ideal location. As Asia shuts, the UK opens, and then action rolls across to the US, and you can take advantage of the UK and the US session. Realistically, the Asian session doesn't move much unless you're trading things based around the Japanese yen. And the best days to trade are Tuesday, Wednesdays, Thursdays, and Fridays. So we'll be coming on these sessions on Mondays. We've got big players in the markets, and these markets are manipulated. All markets are manipulated. In the currency markets, it's these names: Citi, JP Morgan, UBS, Barclays, Deutsche Bank, HSBC. They represent about 80% of everything that's traded in Forex. So we're not going to trade against them. The idea for us is just to piggyback, just to jump on their backs and follow what they're doing. So we do need to understand, if we're trading on margin, what that entails. And I've mentioned it's a 30-1 good faith deposit. So if you want to take control of £10,000 worth of currency, then you need a £300 deposit in your trading account to do that. And if you don't understand how margin works, then you run the risk of being stopped out, getting margin calls if your trades drop into too big a loss. And so what your broker will do is it will start to close out trades until you're in margins, or you deposit more funds into your account. So it's important for us to understand how margin works, especially if we're trading on CFDs. So also, there's various ways of trading. Lots of people like to jump into the markets to actually trade positions over a long period of time, over weeks, months. Just, not run the risk of entering the markets too early. They'll just keep that position going for as long as they can. That's called swing trading. If you're swing trading, every day you've got an open position in the market, there will be rollover fees. And margin trading, if you start on a small account, then if you get into margin trouble, then you can wind up doing the major no-no. The Sergeant Major says this is a major no-no. We're not blowing accounts. We're not putting money into the market to blow those accounts. So imagine a Sergeant Major saying, look, this is the major no-no. The strength in the market goes to those who are still left standing at the end of the day. And so the idea is to take you through what we're taking you through, get you to still be standing and still grow your account steadily and still be standing weeks from now, months from now, years from now. We're not looking at blow accounts. And I've mentioned that we're always going to use a stop loss as well. So there is some homework. I know, a lot of people, already trading out there and are starting from, from scratch. So have a look. If you can go to metatrader.com and download the trading platform, sign up for the the MetaTrader community. This is a lot of the free stuff that you've got open to you on MetaTrader. You can set up a demo account with MetaTrader. Meta. Right, I'm going to do it phonetically so that so that everybody can understand it. It's Mother Echo Tango Alpha Tango Romeo Alpha Delta Echo Romeo.com. So metatrader.com.
Thank you.
Yeah, and download the trading platform and sign up for the MQL community.
Sorry, Ollie, quick question.
Yeah.
How does that compare to something like Free Trade Trader? Do you still think it's worth me downloading MetaTrader, or?
Do you know what? I think MetaTrader tends to be what the professionals use, and I'm going to talk about MetaTrader in the next session. So,
okay.
Yeah,
no problem.
Yeah, but just set yourself up a demo account, take a look at the platform, have a play around. And I would say to you, consider the trade buy or sell buttons as nuclear buttons. So bad things happen if we press them and we don't know why. So let's not press them. And if you've not already worked through this, I know we've had a lot of people register late. Please go to baby school, work your way through preschool. I think the other reason I've directed people to preschool, to baby pips to start is baby pips is an absolutely fantastic resource for learning about trading. And a lot of what I'm teaching on the course, a lot of what I'm teaching is going to be based on baby pips. So, if you work your way through baby pips, to advanced trader, you're going to be a very good trader indeed. Okay.
Thank you. Bye.